Robert Kiyosaki is an American entrepreneur, investor, educator, and the author of one of the best-selling books, which is called Rich Dad and Poor Dad. So he was actually born on 1947 in Hawaii, in USA, and he is famous for teaching personal finance, investing, and financial independence. So this man's teaching has a lot to do with finance, investing, and especially trading itself. So I'm going to be sharing with you guys 5 reasons why you are not profitable and why you have not reached where you want to be in trading based off of his teachings on investing, finance, and trading as a whole. All right, so make sure that you follow this video right to the end because the 5 reasons are going to be life changing. These are going to be the reasons that will probably turn your trading around, right? So make sure that you follow me to the end. Now, first, uh, when it comes to Robert Kiyosaki, he mentioned so many things about that video, which is straight 5 reasons why you are not a profitable trader, straight from the lessons of Robert Kiyosaki, the author of this Rich Dad and Poor Dad. Right, these are the same principles that separate the rich from the poor. All right, and yes, they apply to trading as well. Now, remember that knowledge is wealth. Knowledge is wealth. This is not about certificates in schools and stuff like that. Knowledge is wealth. So when you understand knowledge and the principles of getting rich as a trader, this is going to be a game changer for you. There are so many people that maybe know how the technicals actually work, but they are not profitable. And this is not because it's some magic, it's simply because they lack the knowledge part of trading. All right, they lack that knowledge part of trading. So now the first reason why you as a trader you are not profitable is simply because you confuse assets and liabilities. Now, this is based on the teaching of Kiyosaki, which is that the rich focus on assets while the poor focuses on liabilities. Now, in trading, what does this actually mean? Your money in your account is like an asset, all right? When you deposit money to your account, the money is like an asset. But if you're now that type of person that is constantly taking reckless trades or reverse trading, after every second you jump into a trade, you jump out, you jump into a trade, hoping that you will go your direction and stuff like that, what you are doing to that account is that you have now positioned the account to be like a liability, right? Which means it's going to constantly be taking money from you, are constantly going to just be depositing. You understand? So liabilities are things that take money away from you. So when you are trading like a liability. You will constantly be taking money away from you. But you have to treat your trading like an asset. An asset is something that you build over time to then give you money, right? You get it at least to save up money. So if you are treating your trading account like, okay, I'm gonna put this account like this, maybe it's $10,000 in the next 1 year or in the next 1 month. I should have made this percentage from it, right? That's how you trade your trading account. But now, if you confuse the both of them, if you use your account as a liability, you mostly likely be gambling. Why? Because you will jump into a trade without any plan, you jump into a trade without any confirmation, without any proper system aligning together to give you that direction. The moment you do this as a trader, what you're doing is you are putting your account as a liability and you can never be profitable unless you shift your account to be like an asset. All right, now let's move on to the second reason. Now, you lack financial education. This is the most important one, actually, as I can say. Now, Kiyosaki also teaches that education is the key to wealth, but he doesn't mean school certificates and all those type of things. He means that financial education. Many traders fail because now they don't even understand risks, leverage, or psychology of the market. You can see a trader coming into the market and he barely knows anything, but he started trading already. He doesn't know the importance of leverage. They use unlimited leverage, all those type of things. You just feel like this is going to be giving me a lot of money, or this is going to give me quick gains and stuff like that. You don't have the financial education, which is something very, very bad. All right, you're just trying to get rich so quick and you skip the most important things. Your risk management, you have an account of $1,000 and you enter one trade and you lose it all. That is that those are the effects of lack of financial education. All right, because if you have financial education, you would understand what risk means before you start trading. You understand that the place where risk takes in your trading career. All right, you understand leverage as a whole, because there are some people that are looking for brokers that have unlimited leverage, 1 is to 2,000 and stuff like that. You don't actually understand the meaning behind all that. All right, the higher your leverage, the risk it is for you to lose your funds and stuff like that. Okay, but so you have to understand that very well. That this is one of the lessons that Kiyosaki teaches, that okay, find the a lot of traders, they lack financial education. They lack financial. Now let me give you an example. When you go to school, when you want to become a doctor, how long does it take for you to be formed, or for you to be taught, or for you to be trained to become that? Now, what that simply means is, let's just say you want to be a nurse, and then it just ended with you on the degree level and stuff like that. Maybe it took you about 8 years, right? Now, what has actually happened within that 8 years period is that you have been trained within an 8 year period, right? Consistently, they have been teaching you consistently about stuff that has to do with nursing for a period of 8 years. That's why when you graduate at that time, now you feel like, okay, you can be a good nurse, right? But when it comes to trading, you have not even been back testing constantly. You have not even studied your field constantly. You don't even know how the market moves. The psychology of the market, you have no idea, but you just want to place buttons. All right, so when you're this type of person, if you understand that you lack financial education, you have no idea about what risks actually means, or you don't understand how to take risks uh with well calculated risks, you don't understand how to maybe uh protect your account, then it's going to be difficult for you. All right, this is one of the second reason why you as a trader, you are not profitable. Okay, now most traders also, they don't even understand that investing prioritize long-term growth with moderate risks, while you are speculating, or while speculation now also targets what, just short-term profit. So most traders, they are interested in speculation rather than investing. And when it comes to speculation, you are just focusing on what, short-term profits, maybe trying to just jump in, jump out, jump in, jump out. But when you take trading, right, like an investing something, like an investment, it will help you now to know that okay, I'm targeting this percentage over this period of time. I'm doing this over this period of time. All right. That's why I said the fact here is that 90% of traders, they lose money because what, they don't know the difference between speculation and investing. Investing prioritizes long-term growth with moderate risks, while speculation targets short-term profits from volatile assets, accepting higher risks. So now you will start to understand that okay, if I'm trading like I'm investing in something, I'm going to do what? You are going to prioritize long-term growth with moderate risks. Take note of that word, moderate risks. But now, if you're somebody that is so much interested only in speculation, what are you going to do? You accept high risks, you want to trade volatile assets and stuff like that, which at the end of the day, it will not be uh it will not end up well for you unless you build up that experience for some time. All right, but if you're watching this video at this moment, it actually shows you are neither profitable, or you are still trying to reach a particular level where you want to be. All right, so this is the second point. You lack financial education, so you have to go in, research about the market, study it very well, get mentorship, and also you do what, backtest a lot about your system, understand how these markets move. It is not just about the charts, right? You have to understand the psychology, and you need that financial education, how to keep money, how to make money and keep it, because for some traders, they can make 100% of their account today, and tomorrow they don't have anything in your account again. So you don't know how to keep money, right? You don't actually know how to protect money, so you lack financial education, and those are the things that will keep you losing, or you keep you on a losing streak. Now let's move on to the third. Now you work for money, not letting money work for you. Now you guys, if you have reached that product, you have already mentioned this a lot. All right, you are working for money, and you're not letting money to work for you. Now, according to Kiyosaki, the poor people, right? The poor people, they work for money, but the rich make money work for them. All right. But now what happens? How does this relate to traders? Many traders are like employees. They chase every signal, every hype, and every short trade. You want to see a buy, they're running after it. You want to see a sell, they're running after it. How is this gonna help you? You are now treating trading like an employee, all right? That means you are working for the market, rather, as I'll put it. You're instead working for the market, because when you are running after signals like that, every spike wants to happen, you want to catch it, the market comes back, take your stop loss. What you are simply doing is you are working for the market, and the market will continue to take your profits. All right, so the fact here is actually that trading should be a strategic and not a reactive something. Let your system, rules, and risk management do the heavy lifting for you. Once you build your system, you build your strategy, it is now your strategy to say, hey, there is a signal here. Come, hop in. Let's trade this one. Your strategy will say that, okay, this is confirmed. Let's take a trade. You will not notice that you are more relaxed and you are more free when you want to trade. It becomes a boring process, and that's how it's supposed to be. All right, you're not going to be forcing trades up and down at that moment. What you're doing is you are waiting for your system to align with everything before you hit the gas button, right? So it's going to help you a lot if you should develop your strategy, plan it very well, and then let your system, rules, and risk management do the work for you. Don't be the one working for the rules and the stuff like that. Let it work for you. All right, so what this means is that you are not working for your system, rather the system is working for you, right? Once you develop that system, you are just there on the chart to do what? To see that there is a confirmation, and then you enter at that moment. It will be even good for those that have robots. What do? The robots will give you a signal that, okay, there is this confirmation, there's this engulfing candle, there's this head and shoulder pattern, there's this double bottom pattern. You can now enter. Some people fix robots that talk, right? So what this means is it is now the robot or the system that is working for you as a trader, not you doing what? Working for the system or working for the market. Okay, so you should not be the one running up and down after every signal. It is should be your setup that is uh selecting all this for you. All right, what is the tip I'm trying to show here? Set up a trading plan, stick to it, and then your money should grow systematically, not emotionally. All right, once you have that system put into place, it should be that system now that what is growing your account. You should not just be trying to chase the news, or once the news come in you want to sell, and all those type of things. It will not help you. Once you have a system that is growing systematically like that, you're going to see that your curve is going to be moving up in a gradual way, right? But if you're someone that is doing what is instead working for the market, you're chasing every trade, every hype, every signal, you're in 10,000 signal groups, what you're going to see is your system is going to be moving like waves, and then probably just going down. Okay, so let's move on to the fourth reason. And remember, the feed reason, as I mentioned, is going to be the one of the most important ones. Now, fear and ego control you. Now, many of you will not actually know what this means, but Kiyosaki also emphasized that the poor people are controlled by fear. All right, poor people are controlled by fear. Traders, they fear missing out, they fear losses, and their ego dictates their trades. All right, so as a trader, fear should have nothing to do with you. Remember what I said: poor people poor people, they are controlled by fear. Remember, we are talking about principles of getting rich here, and the ones that relate to trading. All right, poor people relate to fear. That's why first, if you present an opportunity for a poor man here that is going to spend some money, what is the first thing that you'll be scared of? Is that you're going to run away with my money, this is going to happen, this is going to happen. But when you present that same situation to a rich man, he is not going to be scared of that. He's not going to be thinking like that. What he's going to be doing is trying to analyze if that is going to be a good opportunity so that he can invest in. All right, that is the difference between the rich and the poor. But when it comes to trader now, an unprofitable trader, fear of missing out on trades is all over his head. Fear of losing is all over his head. Fear of leaving money on the table is all over his head. Then greed comes in. His ego is there as well, and stuff like that. Now, how does ego have? What does ego have to do here? Let's say, for example, you find a trade that, okay, price has come to your order block and you want to buy. bullish order block and you want to buy, right? Now, price apparently sometimes will do what? Will violate that order block. But you as a trader or an unprofitable trader, your ego will not allow you to accept that loss. All right. Your ego will not allow you to accept that your trade has failed. You keep on holding till your account is gone, which is one of the worst things that you can do as a trader. So fear as a trader, for you to eliminate this fear, what you have to do is to do what? Go back to reason 3. You have to build a system that will be the system leading your actions. All right. So that when you see a trade, first, you will not be scared to enter the trade. Already you know how to manage your risks. You want to see a trade, you're going to be jumping into it with no hesitation, with proper risk management. All right. If your system says close at this level, you are closing. You are not going to be scared that I'm going to close and the market will keep going. No, that's going to be great. All right. You are going to do what? Control your fear. All right. You are going to control your fear. Don't allow your fear to control you as a trader, because those are the things that happens when poor people or unprofitable traders they do. All right, these are the things that control them. Ego here is one of the worst, because when you see someone, maybe you are selling and after all the market shifts to a bullish trend and you are still trying to force the sales, that's ego. All right, you don't want to accept the reality of what the market is doing. So what is the fact here? The fact here is that a single revenge trade can wipe out a week of gains. Fear, ego are your worst enemies as a trader. Okay, fear enemy is your worst enemy as a trader. Why? Just like I mentioned about ego, you might make profits for some time, even for over almost a month, and one day like that, one day, because maybe you are scared of losing a trade, because you don't want to lose a trade, you feel like you are always right, you can end up wiping everything of your everything you have worked for. All right, sometimes it can even put you homeless. Okay, so what is the tip right here? Now, trade with discipline, accept small losses. Don't let your ego to uh take you to somewhere that you don't want to be. All right, accept small losses and let winning trades run as your system says. All right, emotional control is also your sacred weapon. Control your emotions. I know that when you see the market gives you $1,000 profit and then it's coming back to 500, you are scared, you are emotional and all that. Please follow your system. Be stick to your system no matter what. Let your system be the one to determine whether you should run out of this trade or not. Okay, because if you are doing that on your own, you will start at the end of the day, you will notice that your results are not your results don't align, or your results will not look good. Okay, you will not have consistent results, as I will put it. So make sure that you follow your trading plan. Be disciplined, stick to that plan, stick to that system. Let it be the one to generate signals for you and stuff like that. You should not be the one running to generate signals and stuff like that. And then maybe you see a trade, you are saying that I knew that this trade must work, I knew this trade must work, this trade must work, is an A plus setup. Even A plus setups do fail. All right, so even A plus setups actually fail. So you are not supposed to hang on to a trade or get married to a trade, and then at the end of the day you lose all your account because of a single trade. That is ego, and it is your enemy when it comes to trading. Okay, let's move on to the fifth example, which is actually the fifth reason, which is actually the one that is the most important among all these 5 reasons. Now, you don't think long term. You don't think long term. I know as a trader you want money overnight. You want to get out of your situation. You want to help your parents. You want to make money as fast as possible. You want to live that social media life and stuff like that. But what you are doing wrong is you are looking at it over. You want something to happen to you overnight. Like I mentioned from the start, when they are teaching you a trade in school, or when you're even doing apprenticeship, you are already uh, condition to know that this is going to take me years to do this. This is going to take me years to do this. But when it comes to trading, and you are being trained either by a mentor or wherever, that okay, this is the skill that you need to have to do this. You, the moment maybe some of you take a 1 month training, you are already there trying to frustrate on your account. You are not thinking long term. You are already there thinking that I'm going to raise $100 to $10 million and stuff like that. At the end of the day, it's not going to work. All right. So Kiyosaki also teaches that the rich think long term, investing for wealth growth over years, not instant gratification. All right. Traders often chase short term wins and forget compounding. What this actually means is that when you'll see, if you look at an unprofitable trader's history, you're going to see that there are so many wins, but what, little profits like that. What is happening is that he's running into a trade, he sees some small profits, he runs out. You run into a trade, you see some profits, you run out. This is actually one of the worst things that you as a trader can do. Okay, not thinking long term. When you start thinking long term now, what you're going to start noticing is that you are going to be more patient in trying to build your system, because you know that over 5 years, over 10 years, this is where I want to be. All right, but if you're just thinking about the next month, next 2 months, what you're going to be doing is you jump into a trade, you see $10, you run out, and then the market keeps going, and then you start regretting why did you close and all that. This is not good. Okay, when you focus on short term, it is actually one of the worst things that can happen to you as a trader. Maybe at the end of the day, you end up giving up because you are not seeing results and you didn't think that this is going to take a long time. All right, but sometimes you can become profitable within a short period of time. This also depends, and it depends on the type of person you are and the efforts that you have also put in. But as a trader, know that thinking long term is the way forward, is the goal. All right, stop thinking about 1 year, 2 years. Think long term, 10 years, 30 years. If you want to watch one of the IST lessons, he mentioned that when he was about 20, he was thinking that he was going to retire at 40. That's a period of how many years? 20 years. And today he's retired, right? You have to think long term like that. You think for 5 years, 10 years ahead. That okay, I want to be at this point this year. Now, when you do like that, you're going to lift up the pressure from your shoulders and you're going to put your head down to actually work. Okay. Now, what is the fact, as we're talking about this particular reason? A trader who focuses on consistent small gains will outperform the one chasing every jackpot trade. That is it, point and simple. If you're a trader who focuses on consistency, trying to put your system into work consistently, you're going to, and then even if you're having small gains, what you're going to do is outperform that trader who is always trying to catch a trader who will give him 200% profit, 300% profit, and so on. Okay, so the tip here that you're taking back home upon on this reason is that what you're going to develop a compounding mindset. Have a compounding mindset. Protect capital first. That is your main purpose. That's your main duty as a trader. Protecting your capital. Grow slowly and focus on consistency rather than hype. Okay, grow slowly. Protect your capital and grow slowly. Protecting your capital means you're risking a small percentage of your account and you're planning to grow it what, slowly. You are compounding it. All right, if you make 100% a year, people look at it to be too small and stuff like that, but that's the way for you to grow. If you're able to do something like that, many people don't do that. But when you don't get 100% from your trading, at the end of the week you feel like you're a failure and stuff like that. Maybe because you're comparing yourself with other people on the media, not knowing that the media is where you see every fake things up there. Guys, make sure that you do what, have a compounding mindset. Have a compounding mindset. Protect your capital. All right, you have to protect your capital to trade the next day. If you open up, you lose all your account today. What about tomorrow? If you see a trade set up tomorrow, how are you going to take it or not, because you don't have capital? So protecting your capital is one of the greatest things that you as a trader have to do. Okay, grow slowly. That's the way forward. Chase uh uh don't chase overnight riches when it comes to trading. No, the rich people think long term. Why am I constantly saying rich people? Because we are looking for riches here in trading as well, right? And riches have principles. If you're not that, if you're not someone that is thinking long term, you cannot be rich. It's difficult for you. All right, it's difficult for you. All right. So, guys, I think we have discussed quite a long. I don't want the lesson to be that long, but tell me on the comment section which of these lessons is one of your best, which of these lessons has been one that is holding you back. Just tell me on the comment section, and maybe we'll talk more about it so that it will help you as a profitable trader. Please, if you're listening right up to this end, I am really thankful, and I hope this lesson helps you. All right, leave a comment and a like, and also share with your friends who are going through these phases, or who are not yet profitable, or who are not yet where they want to be in trading, so that at least it will help them as well. Okay, so thank you guys so much. And for you, if you want to start becoming a profitable trader, remember these lessons from Robert Kiyosaki. Treat your account as an asset, invest in education, right? Let money work for you. Control that fear and ego, and always think long term. What did I say? Invest in education. Pay for mentorship. Learn from people who are doing better than you. It is not it is a good investment, as I'll put it, right? They all say the greatest investment is investing on yourself. Get education. Treat your account like an asset. That's simply it. Put some years ahead of you that, okay, I want to be here with this time. Don't force it. All right. So thank you guys so much, and subscribe if you haven't as well. And we'll see you in the next lesson. Okay.